Hey everyone, Alex here. Did you know there's a way to make money from the stock market without constantly worrying about stock prices going up or down? Today, I'm revealing exactly how beginners can create passive income streams through dividend investing, and I'll even show you some beginner-friendly stocks to get you started right away. Stick around, because there's one surprising tip about dividends that wealthy investors rely on, and hardly anyone ever talks about it. First things first, what exactly are dividends and why should you even care? Simply put, dividends are payments made by companies to their shareholders as a way to distribute profits. Think of dividends as the stock market's way of saying thank you just for owning certain stocks. It's passive income at its finest. Earn money while you sleep or go about your daily life. But here's the twist. Not every stock pays dividends, and not every dividend stock is a great investment. So how do you spot the best dividend stocks as a beginner? We'll dive deep into that in just a moment, but first, let's talk about why dividend investing is incredibly powerful for building wealth. Dividend investing provides two amazing benefits at once. First, you earn regular passive income, which is paid directly into your investment account. Second, many dividend stocks also grow in value over time, meaning you're making money from dividends and from capital appreciation. It's like planting a money tree that bears fruit consistently while also growing bigger every year. Now, I bet you're wondering, how much money can you realistically make from dividends as a beginner? Great question, and here's where things get really interesting. The beauty of dividend investing is that even small initial investments can grow into meaningful passive income over time. Let's say you start by investing just $100 a month into solid dividend-paying stocks. With reinvestment and compound growth, this small monthly commitment could eventually generate thousands of dollars a year in passive income. But let's not get ahead of ourselves. Which dividend stocks are best for beginners? Let's start with a classic, Coca-Cola. This iconic brand has been around for over a century, and it's paid dividends consistently for decades. In fact, Coca-Cola has raised its dividends every single year for over 50 years. This makes it what's known as a dividend aristocrat, a company with a long, reliable history of growing dividends. Investing in a dividend aristocrat provides stability and predictability, two key elements every beginner investor needs. But Coca-Cola isn't the only dividend aristocrat worth your attention. Have you heard about Procter & Gamble? Even if you don't recognize the name, I promise you know their brands. Tide, Gillette, Crest. These are essential household products that people buy repeatedly, even during economic downturns. This makes Procter & Gamble another ideal choice for beginners looking to build reliable passive income streams. By now, you're probably wondering, these sound great, but how can I pick dividend stocks myself without relying on someone else's recommendations? I've got you covered. Let me share the three most crucial things you must look for in any dividend stock before investing. First, always check the dividend yield. This percentage shows how much you earn from dividends relative to the stock's price. But here's a critical warning. Higher isn't always better. A super high dividend yield could signal trouble ahead. So what's the sweet spot for dividend yield, and how do you avoid dividend traps? I'll reveal that shortly, so don't go anywhere. Second, look closely at dividend growth history. You want to invest in companies that consistently increase dividends year after year. Why? Because consistent growth shows the company has a stable, profitable business and is likely to continue rewarding shareholders long-term. Third, check out the payout ratio. This number reveals how much of a company's profits are paid as dividends. Ideally, you want companies that pay out less than 60% of their profits. Why is that important? A lower payout ratio usually means the dividend is sustainable and has room to grow, even during tough economic times. Now, remember that surprising dividend tip I mentioned earlier? It's something that wealthy investors rely on to massively boost their dividend earnings. And yet, almost no beginner investor uses this strategy. Curious about what it is? Keep watching, because once you hear this tip, you'll never approach dividend investing the same way again. And trust me, your future passive income streams will thank you for it. Here's that surprising secret wealthy dividend investors rely on: dividend reinvestment. It sounds simple, but the impact on your wealth can be astonishing. Instead of taking dividend payments out as cash, you immediately reinvest them back into buying more shares. This accelerates your growth exponentially because each new share you buy generates even more dividends, creating a powerful snowball effect over time. Think of dividend reinvestment as fueling a financial engine. Every dividend you reinvest increases your passive income stream permanently. And here's the best part: it's easy to set up automatic dividend reinvestments in almost any brokerage account, meaning you never have to think about it again. Your wealth quietly grows in the background while you focus on living your life. Now let's talk about a few more beginner-friendly dividend stocks to consider adding to your portfolio. Another favorite among experienced investors is Johnson & Johnson. Known for iconic healthcare products like Tylenol and Band-Aids, Johnson & Johnson has a rock-solid reputation in financial stability. This makes them another fantastic dividend aristocrat that's perfect for beginners seeking steady passive income. Want another great pick? Check out Realty Income, a real estate investment trust known for paying reliable monthly dividends. Yes, you heard right, monthly dividends. Realty Income owns properties rented out to stable, long-term tenants, including major retail chains, making their business model incredibly dependable. Monthly dividends provide regular, predictable cash flow, helping you see the immediate benefits of your investments. At this point, you might be asking yourself, are there risks or downsides to dividend investing? Great question, because the truth is, all investments carry some risk. One risk to be mindful of is dividend cuts. Occasionally, companies facing financial troubles will reduce or even eliminate their dividends altogether. That's why choosing financially strong, reliable companies is critical. Always research the company's financial health and keep your portfolio diversified to spread out your risk. Speaking of diversification, how exactly should you build a well-rounded dividend portfolio as a beginner? Here's the smart way to approach it. Instead of putting all your money into one or two stocks, spread it across multiple industries. For instance, combine consumer staples companies like Procter & Gamble and Coca-Cola with healthcare giants like Johnson & Johnson and real estate investments like Realty Income. Diversification protects your passive income stream if one sector hits rough waters. But there's an even easier solution for complete beginners who prefer a hands-off approach. Dividend ETFs. Exchange-traded funds, or ETFs, are like investment baskets holding multiple dividend-paying stocks. ETFs like Vanguard's Dividend Appreciation ETF or the iShares Select Dividend ETF are perfect ways to own many high-quality dividend stocks at once, without spending hours researching individual companies. They instantly provide broad diversification, protecting you from unexpected market changes. Now you might wonder, how much money do you need to get started with dividend investing? Here's some good news: you don't need thousands of dollars up front. Thanks to fractional shares and commission-free investing platforms, you can start your dividend investing journey with as little as $50 or even $25. The real key to building passive income isn't the initial amount, but consistently investing small amounts regularly and reinvesting your dividends. One final tip: dividend investing requires patience. This isn't about quick profits or chasing trends. The secret to becoming successful with dividend investing is staying consistent, reinvesting dividends, and holding onto quality stocks for the long haul. Remember, dividend investing is about building lasting, reliable passive income streams, not chasing the next hot stock. Now that you know how dividend investing works and which stocks are perfect for beginners, it's your turn to take action. Even a small investment today can grow into significant passive income later, helping you secure financial freedom and peace of mind. Thanks for joining me, and I hope you're inspired to start your dividend investing journey today.